Ken of Tortoise Capital with a closure report for April 15th, 2020. So we have the S&P was down 2.12% today. Slightly better than that was the Dow, precious metals, Aussie dollar, healthcare, treasuries, VIX, and the inverse oil. Worse than the market were marginally tech, Brazil, emerging markets, Euro-Asia blend. There's McDonald's, Win, real estate, clean energy, small caps, finance, basic materials, energy. So it really was the old reliables like Walmart, Apple, Boeing. Now the Tesla and Virgin Galactic speculations continue to do well, so our swing trades are well postured there. Had volatility wake up a little bit more, and again inverse oil. So mostly it was the market suffering, and then certain sectors suffering even more. The worst postured ones, Cliff Natural Resources, the commercial real estate finally starting to collapse, Alcoa, Mexico oil, Devon Energy, energy sector, basic materials. So it's that infrastructure story again. And we look over here, we saw yesterday's range was here, today's range is now here. It was a bit of a pullback. 10-day high remains in place. It ended up pretty much in a doji. It closed where it opened. We're slightly under Monday's opening, so that just dips negative. So our acting price here is now, we're at about 18% sell off from the swing highs. So that's 10, 20. That's about 18%. So 1 day low, skin of the dragon, the Bollinger Band mean, the bottom skin of the dragon. That one is very important as a support level, as I talked yesterday. The 10-day low remains in place as we march all our dates over one. Should have done that already, sorry. Sorry, I just screwed that up. Daily low and skin of the dragon. And then our 30-day look back. So our 30-day high is going to still be here, solidly locked in. 30-day low is still here. That's locked in. Let's give us a little more room. 30-day low. PSAR and belly of the RL10. Belly of the dragon, significant. The Z-1. 10-day low. I'm going to add another support level here at the PSAR flip. So that's our price ladder on the way down. There's not much resistance overhead, so we're going to keep, we're going to add one for the daily high right here, en route to the 10-day high, which is here. So daily box has got to shrink a little bit there. And our 10-day high is slightly there. And still not much resistance anywhere through this whole region. So if it can break out of these two, which is fair value, by the way, or the trader's price, then it's free and clear up to the RL270, which is fair value. There's the Z plus 2 edge of the floodplain as a target. Then the 30-day is solid. Then if we look higher, we would see the skin of the dragon, the hump of the dragon, the hump of the RL10, and then the Z3 excursion before the big sell-off. Those are the three deeply healthy targets to the upside. Then we have like a Z2 excursion here, then just halfway up that stack here. So those are upsides that are possible, but that's for another day. Meanwhile, we're fighting this fight down in here. We just cruised into summer, so we still have a long bias. This is a positive sloping MACD histogram above the zero line, which gives us our long side bias. So we have gone from winter through a healthy spring in two legs. So we had one leg from here to here, second leg from here to here. Now we're at the end of the second leg. We talked about that yesterday also, that we have to respect the downside, and slipping back into winter But the possibility of a summer is here, and it's baked into the cake with some pretty good recoveries based on unlimited um, liquidity from the Fed. But there's no such thing as easy money, but if there was, it's over. All right, so let's see if we can get a speed run going now, looking at the swing portfolios. Alcoa, our stop was hit on that one today, so we're out. Apple, our stop was hit today, so we had 2 long positions and then gave back to here. I like taking it in measured steps like that. Nothing wrong with that. Now, going forward, what am I interested in? Intraday, I'm interested in this kind of a breakout. I'm always interested in daily breakouts, but not. And I think I would get into a swing trade on this one by starting as a day trade, keeping some money, especially if it got through 290.41. Then I would look to keep a piece of the day trade gains as a swing trade, but not until. Aussie dollar. We closed our swing trade yesterday, which had a reversal and 1, 2, 3, 4, 5 positions long and cashed. Today was an intraday opportunity. We didn't take advantage of that as a swing, but it was an intraday trade in the currencies that are now back into this rising dragon. So that's going to start off as an intraday trade and then possibly grow. If it gets below this price level here, I think I'm interested now in a swing, and I would certainly swing to the long side if it broke out of here. So it's going to be day trade in the yellow zone, and I'll get short here. I'll add a second position if it breaks the skin of the dragon, third position if it breaks through the PSAR. Boeing. Our stop was hit yesterday, and today was an intraday trade in Boeing that started off well and then closed well. So we'll see that in the strategy podcast tonight. As a swing, I will continue that in this way. What I'm looking at here is a breakout above today's high. I'll add a position. If it breaks above the Bollinger Band meet, I'll add a position. My stop would be at today's low, where I would also stop and reverse, and I would add a second position here on the PSAR flip. So that's I want it to open inside the yellow, and I'm hoping to get long on that one. Caterpillar. Our short on this one hit today. This was the trade frame that we set up. It opened here, so we're going to have a short position at this point. Now, we just had the PSAR flip, so this is going to flip tomorrow. So we're in front of that one. Our stop on a swing would be at the top of the top skin of the dragon, and what we're looking for is a move to the far side of the river. Where will I add another short position on this one? If it breaks, let's see if we can see that a little easier. If it breaks below today's low, I'm going to add a second position, and then if it breaks below the RL90, I'll add a third position en route to here, which would be a fourth position short. Okay, so let's put our stop in there, and our stop is right there. Okay, Cliff. This is another one we got short on today. This was a great intraday trade as well, so this is going to be a demonstration of a core and turbo. Our stop was hit on the swing trade. That was this stop, ends up getting hit here. And then we stop and reverse intraday there. And then we added a second position as a swing here. It recovered a little bit, but this trade, both positions are paid for now by the intraday trade. And we're going to have our stop here on a swing at the peak of the RL10. So that trade is looking like this. This is where I will add a third swing, and this is where I will add a fourth swing. Okay. Cisco. We're still into this swing. Our stop is still here. see that. See the whole trade a little better. Sorry. So we were long from here, and our initial stop was here. We adjusted it yesterday to there. We're about at minus 0.5 R in hand. I still will plan to add a position now. If it breaks the 2-day high, I will add, and then if it breaks the Z2 floodplain, I'll add a third position long. But this is one that I'm willing to take some risk on. Would I stop and reverse here? No. Where I will go short is if it breaks the PSAR. Okay. And the reason for that is Cisco's been one of the strongest players and is going to be essential in the build out of tech solutions for the internet, adding robustness. So I'm not going to get in the way of that. Timber, we got short today on the gap down. We were prepared to get long or short. It gapped down and continued to fail. So our trade now looks like this. So there's our stop. Here's our short entry. And down we go. I will add another position if it breaks below here. I will add a third position on a break of the dragon and add another position on a break of the PSAR. So I want to build that position in a hurry in the same way you see me getting into multiple positions. This is one that can move quite a bit. So I'm looking to add another position short here. Chevron. We're still holding this one. It reversed inside the dragon, so this is still working. We're slightly out of the money on this one. The stop is here. We'll adjust it right to there, to the skin of the dragon. It started off down here, so we've taken some of the risk out. Do I like this as my second entry? I think I want to go here to add a second entry. Diamonds, we're just studying. We trade this in UDOW and SDOW, but we're just using this as the big sell-off, the big rebound, stable, minor give back, second rebound. That is half the size of this bounce. It's just mucking around right in the middle. I'm just going to put that line right there to say that's the midpoint of this congestion zone. Which way is it going to go? And I think I wouldn't take a long swing until it comes out of this box. And I'm going to tighten up the parameters on that just a little bit there. That's where I want to get long as a signal in diamonds. Devon Energy took the R loss here on this breakdown. Now, as studying this one intraday, I'm interested in this on an intraday move first, and then I will look to keep a swing trade if it clears either here or here. I will keep a swing trade in either direction. This is in a critical state, and I'm ready to get back into this thing as we go. Emerging markets. Our stop is still, we get two positions long. It held up in a doji. It's still above the Bollinger Band mean. Didn't really suffer. I like that position there. We're going to tighten it up just to the skin of the dragon. Good to go. EFA. Just studying it. It's actually in a little better posture than emerging markets. It's holding right on the edge of the dragon. I actually kind of like that. I really kind of like that little posture. I want to trade that one tomorrow. Perfect doji in a favorable position at a time of maximum uncertainty. Let's start this one as an intraday trade with a hybrid frog. Take it in whichever direction it goes, and then keep 20% of the gains as the initial funding on a swing position that we will build with markets money. Okay. Japan, same thing. We've got one position in. It's holding up well. I'm going to add a second position now if it breaks above the 2-day high. Third position if it breaks above the 3-day high. I will go short here at the skin of the dragon. Add a second position at the RL90. Third position here at the bottom of this box. Mexico. We haven't gotten out of our. Oh no, I'm sorry. We did have a long position here. Our stop is still here, getting ready to to crash. What are you going to do? Well, here's what I'm going to do. I'm going to add a second position north there. I will stop and reverse if it hits that, and I will add a second position if it breaks the belly here, and I will add a third position if it breaks that PSAR, and a fourth position. Let's see, raise this up. Yeah, if it breaks the belly of them. So I'm ready for this thing to collapse. So if it does anything like this sell-off, we will have 1, 2, 3, 4 positions in the middle of the next collapse. It hasn't even gotten to the zero line yet. You could argue this was premature, but that's what an owl looks like. That's what an owl entry looks like. This is almost ready for a P1 failure or a collapsing dragon. Okay, Brazil. Still in good shape. I'll add a second position there. Home Depot. We were too long and hit today. That was one I regretted not cashing yesterday, but that basically scratches that position. It started promising. Now, having said that, I still like the fact that it ended up in a little doji in here. And I would start this one again. Same idea. Intraday hybrid frog, ready to go in either direction, and then keep 20% for the swing. Russell, still postured here with the stop. We're going to move that stop to here. Don't like it, but there it is. Real estate, we're just stalking this one. I'm ready to trade a tight doji breakout on this one now. All right, so we're going to tighten this up a little bit more, right to here, and add a second position if it takes out the 2-day high and then the 5-day high. So that's my tripwires getting long. Here's my tripwires getting short. First position, second position at the midpoint, third position here. McDonald's. Nothing, we're just still stalking this one in its little zone. Clean energy, just stalking, no action today. SCO, triple inverse, sure missed this one, darn it. Looks favorable. I think we got to be ready to start this one as a high priority intraday trade on that breakout, and at the same time trade oil long if SCO fails. We'll see that when we get to SDOW. Silver, our stop was hit here, so we had 3 open positions, made good bank on those, and now we're ready to reset our brain on silver, and we'll start off silver by looking at wheat and precious metals, so nothing on silver. Still in good shape here. This was this was our initial entry here. This is in great shape. We actually got our second position in today when it crested through there and then finished here. So in order to lock in at least a no lose and dinner for 2, I got to raise my stop to there. Risky business, but there we are. So I'm going to add a third position immediately if it breaks out and goes above, and then I'm looking for a fourth position here and fifth position there. So this is a speculative one. Simon Property Group. We had 2 positions and covered it. This is one we got short on today. I have been unimpressed with commercial real estate from the start of this thing. I think long term there are serious structural problems with that. So when I get a chance to get short this one on a gap down, I take it. And our stops on this one are at the above the Bollinger Band mean. This is where I will add. I'm going to add another position if it breaks down below here. Third position if it breaks here. Fourth position at the belly of the dragon. Fifth position on the belly of the 10. Sixth position down here. I mean, this is one that I obviously am not believing in, and I want to get large on this to take advantage of this kind of massive 3-day sell-off that occurred. People are starting to talk about earnings and who's going to get screwed in this re-engineering of the economy. Commercial real estate note holders right now are the people, in my view. SVXY, we're holding on to this one still. This is the reversion to low volatility. Our entry was here, our stop is still here. We're going to move that up to the belly of the dragon. Going to add a second position if it clears the 2-day high. Third position halfway up the stack to the edge of the river, and then the edge of the river. Treasuries. We got an entry today. It broke out of our little tight box today, and our stop is now here. That was an indication we were ready to go in either direction. So our trade looks like this. And you can see where we have planned second entries really above the 10. Let me tighten that up just a little bit to here. And yeah, I like that already. That started off back in the day as a Z2 excursion. I'm just going to keep that in play. So I like this. Treasuries. Tesla. Let's see, 1, 2, 3, 4 positions were protected by that stop, and we said we wanted to add if it got here. I'm sorry, our 3 positions, 1, 2, 3. That's the one I just duplicated. So now we added another position in here today. And then I'm just going to move my little step ladder of a stop. So we've got 1, 2, 3, 4 positions in. And then my next position will be on a continuation play. Yeah, I think that's about where we want to be. Tesla paying off finally. Oil. This one we got short today. In here. Forgot to have my placeholder in there, so here we are on the short, and our stop is going to be here at the skin of the dragon. Best practice on this is to have these pre-drawn so that you don't have to go through the gyrations all the time, and that's why you see a lot of those clustered around on other charts. VIX, the little bit of volatility returned, still not threatening to get through that cluster yet. It's got to get above the dragon before we get the impression that it will be a volatility screamer like that. But I will tell you, we got to be ready for that here and ready for that here. So I'm going to put those in the book, because you can get a 1-day move that would trip all 3 of those. If you look at some of the size of these other daily moves, you can get surprised into that kind of a move in a single day, and you want to take advantage of that. Walmart did relatively well today. However, it didn't trigger our next position. It didn't get to there, and our protective stop was hit. So we had a 1, 2, 3, 4 position swing trade, and just feels like perfectly relaxed exit right here. So I'm really happy with that trade. We almost got a 5th position back in. So now, as I keep thinking about Walmart, and that's twice in a row we've been able to build that stack. We've been making money on Walmart, so I'm going to stay with that orderly move and say now what we've got is a double top, closed pretty well, a pretty clear 2-day low, and we're still up at Z plus 2, so a reversion back to the Bollinger Band mean is not out of the ordinary. So let's just kind of clear the deck on all this stuff so we can set up the trade frame that we want. And just consider this day on its own merits. And we're going to start this one with an intraday trade in Walmart with hybrid frogs, and try to keep 20% of the position so that we can build our first position. And that's what we did on each one of these. So we were trading these intraday. You can see the size of those daily moves. and we were turbo trading intraday and keeping a piece for the swing trade, and that allowed us to use markets money to build up a 4 scoop position, which then exited nicely. So we're just going to lather, rinse, and repeat and start in this way. And this is where I would add a second and a third position automatically, if I can say it that way. And if I'm going short, skin of the dragon, belly of the dragon, I'm going to say fair value also. And then we're going to build up a bunch of these on the downside. I don't expect it to happen, but I'll be prepared for it. That's why you actually prepare. You don't really prepare for the expected things. You're just ready to go on those. It's the unexpected ones that really test your preparation. So here's wheat and precious metals, and we got our exit yesterday on a 1, 2, 3, 4 and exit, and now today's frame looks much like that silver trade, and I'm ready to go on either direction on this one, starting it as a hybrid frog intraday with core and turbo. And when we're in bear volatile, and today was a selling day, that to me is the ideal strategy and tactic to approach tomorrow's trade. Start direction neutral with the open, use hybrid frogs, go in the direction it points, get your risk out of there as quickly as you can, and then scale out to swing positions. This is where I want to add a second. This is where I want to add a second short. And this is where I want to add a third short at the break of the dragon, fourth short here. And do I want to add another one? Yeah, we'll add another long position right here at the peak of the Z3. Okay, so it's going to start with an intraday trade in the yellow zone and a breakout in either direction. Win. Our long position is still fine on this one. We're still in it from here. Our stop is down here. I'll add a second position there. Let's move this up just to the edge of the dragon. And boy, I almost want to get out of that earlier than that. Here's what I'm thinking. I almost want to get out right here. I think that's what I'm going to do. I want to tighten this up to here, and I want to stop and reverse if it gets there. And then what I want to do is add a short position at the skin of the dragon. And then one at the edge of the river. And then one at the PSAR flip. So that's, I think, what I want to do that. And I'll add a second one long here. And a third one long at the edge of the river. Okay, so this is tactical trading with an operational view. So I'm using these as guideposts for my intraday trades on where I want to add without extra thinking. So I'm putting all the thought process into it now when the market is closed to get the operational time frame insights for my regular trading. Okay, U.S. Steel. We had 3 and cashed. That was pretty good timing. It got further smashed today in the sell-off of basic materials. But now as we take a look at this thing, it gapped down, sold off, but closed better. Still in the middle of the dragon, above the PSAR flip, and the RL30 is strong. The 10 and the dragon are strong. Fair value is up here. So I just think, like, on the basis of a one-day reasonable recovery, I want to set up mechanical entries to get long here or short there. So let me tighten that up just a little bit. And I would expect us to be showing this one tomorrow. So add a second position here and a third position above fair value. And then an additional short position here. And probably another one. And that just feels right there. It's not geared to anything, but this feels like it's too far away. The edge of the river feels too far away. So let's just go there. And let's add another one there. Okay, so that's what U.S. Steel is going to look like. Materials. I had been very favorable on this thing twice, but yesterday we cashed that one when it bottom ticked us. We were gloomy about that, and then I said, oh yeah, that's right. it then gapped down and we'd been out of the money, and that nice winning trade would be a losing trade. So now I'm back to a value neutral posture towards it, and I can look at this thing a little more objectively. And just like we said with US Steel, this is part of that same trade idea, you know, like short here, long there. Second position, third position, and then down here it would be second position, third position, fourth position. Okay, so we'll see US Steel tomorrow, or I'm sorry, XLB tomorrow. Energy. Had the gap down. We traded this short in oil, so I didn't take this trade. Oil looked like it was moving cleaner, but I now think this is one we want to be ready to go on, like this. There's one short, two shorts. That's a long. This is a long at the break of the RL10. And then the break of the river. Okay, so that's what we're going to look like in energy. Financials, same thing. See previous discussion. Routine. Tech was better postured. We are long one from here. Our stop is here. I'm going to move that up to the edge of the river. So what that actually does is lock in. Maximum loss is going to be 0.5 of an R if this gets hit. So that was the original R. And now we're about half an R capping that loss. Healthcare I've been favorable with, but today we were required to exit, so we did. But I also have a belief in these Patriots, and I'm willing to bet on them. And we're going to do that standard play, starting with the intraday breakout here. Adding a second position, that still feels correct, like right about there. I'm not going to short them, but that's where my stop will be. Okay. And back to Alcoa. So that's the speed run. Thanks for your kind attention. Control